Good morning to you once again on the business desk at this hour. The commercial property sector in South Africa is betting on yet another interest rate hike. That decision is expected in the outcomes of the Monetary Policy Committee meeting tomorrow. Analysts have also expressed that given the current high levels of inflation, the Reserve Bank's MPC likely to continue increasing the repo rate, which subsequently results in an increased lending rate that directly affects the property industry. It's getting tougher in this sector. Galetti Corporate Real Estate CEO John Jack speaks to us about this. Thank you so much for your time, John. As indicated earlier, you are expecting yet another interest rate hike. What is the likely impact of that?
Look, I mean, it obviously impacts all of us, but specifically in the commercial real estate world, it's just more and more. It impacts the financing costs, it impacts development feasibilities, it impacts investment feasibility. So where we're really struggling at the moment is to actually price these properties, because it's all about anticipation. It's all about where do we think these interest rates are ultimately going to land up, and purchasers are sitting there saying, well, we just don't see it stopping. You know, we thought it was going to stop, but now we're seeing more and more interest rate hikes. So therefore, we need to adjust our yield, and therefore we adjust our price outward. And so now the buyers and sellers are really far apart. So this is one of the major impacts it's having.
How has this affected sentiment in the real estate sector?
You know, at the moment, because real estate is quite capital intensive, you really have to have, and it's long term, you can't just trade in and out of it. In the listed sector, you can trade in and out of it. But really, when it comes down to bricks and mortar, you're in for, a longer period of time. And certainly your investment horizon is a couple of years. And so people need to take a longer horizon view on that property. And we're finding at the moment that there's a lot of capital flights out of South Africa. People aren't happy with the political stability. People aren't happy with, in general, globally we're seeing interest rate hikes. And this really stems from, the war in Ukraine and a knock-on from COVID and supply chain knock-ons, et cetera, et cetera. So what this really does to commercial real estate, and certainly sentiment, is it just says, I'm just going to wait and see. And that wait and see means that sellers have to then, lower their price to a point where it's actually so enticing that the purchasers come to the market.
But that's not altogether bad news, especially the latter that you explained. Who benefits even in this particular dynamic?
Depends on if you're buying or selling. If you're selling, not good. If you're buying, good. But again, it all has to do with where these interest rates land up and where we are in the cycle. If you buy now and it still hikes aggressively from here, you could still land up in a position where your financing costs are really high. But, the point of departure is, how long ago did you buy your property? If you bought your property, let's say in 2020, when we had the lowest interest rates, and now you've been sort of caught with a huge hiking cycle, it might be quite stressful for you. However, a lot of these guys have bought well before that. So before the interest rates even went down, they're just returning back to normal. So actually, they just had a benefit for the last couple of years.
And that's been the interesting development because we know when interest rates were low, we saw new entrants into this market. How are they faring in terms of trends that are seen with the consecutive repo rate increases that we've seen since November in this country?
That's where the stress is coming through. I mean, you can see it in the residential and the private sector. You can see that directly. Everyone got in and bought their first house, or perhaps they bought a bigger house, and that's where the real stress is coming through, because you're financing your car, you're financing your home, you've got a credit card, et cetera, et cetera. So all of these knock-on effects then run through to the market. So there becomes less demand in the market, and then of course that's what translates to the commercial market, because we're buying less products, we're buying less services, for example, because you're trying to contain money as the private person in South Africa. And then effectively those businesses suffer, and then those businesses can't afford to pay their rental, and so you have this ongoing cycle.
We often speak of business confidence, and in the real estate, property and commercial market, what's to be said about this anticipation that is not abating, but we are on tenterhooks as a country when it comes to interest rates, and that then creates uncertainty, which is not conducive for any market.
Yeah, I definitely think we're getting towards a place where, there's been very low business confidence overall, and as a result, people don't want to deploy capital, etc. But what we're finding now, and we see this especially in our auction business, is that there are now those opportunistic investors arriving, lots of cash, big balance sheets, and they're actually arriving and taking advantage of these opportunities. So we're seeing that starting to change. We're seeing the guys now coming to market, they're buying, and these are going to be the guys into the next cycle who really profit, because interest rates will drop again, they'll rise again, and so the market continues to go. What we're really looking for is GDP growth.
Yeah.
That's the real driver of commercial real estate prices on the top line. And so, that's what people are waiting for and holding back for. And we'll see them, and they're coming through. And so that's actually where the demand's coming. We're seeing that sort of opportunity. It's getting towards that pricing level because it really has come off a lot.
That says there's at least a glimmer of hope when it comes to a normalization of sorts, be it economic growth or abating interest rates in South Africa. Where is this particular industry looking at seeing those green shoots and somewhat of a normalization?
Look, I mean, definitely we're seeing it come through in industrial. Industrial has really been just an absolute powerhouse the whole way through COVID. It was really retail and offices that suffered, but industrial has just been a powerhouse. And what's happened with industrial, and this is actually really interesting, is that the cost of the replacement cost of industrial, so steel prices have increased more than 50%. So now to go and build any existing property to replace it is massively expensive. And in order to translate that back to a reasonable rental yield, you're seeing, far higher rentals than sort of existing rentals. So 3 years ago, we were developing, and let's say a new development would come out at 65 Rand a square meter. Those same developments are coming out at 85 Rand a square meter. And all that does is it sucks the rest of the market up into that void, and there's very, very little supply of stock. So what we're seeing in the market, certainly with the deal makers, is that there's no supply. They're constantly complaining that they cannot find a property for their clients. Unbelievable. Whereas in the office market, you've got an oversupply in certain areas. But in industrial, and massive shortage of stock, and to build is going to increase prices. And so that's just been the real opportunity in the market, is to go and buy those existing properties, maybe B grade, lower A grade, and those prices are just rocketing into the gap of where the new builds used to be, really.
Thank you so much for your insights. John Jack is the CEO at Galetti Real Estate Properties, and talking to us there about the commercial property sector in South Africa that is betting on an interest rate hike that we are expecting to get from the Reserve Bank in the outcomes of the Monetary Policy Committee meeting tomorrow. We move on now to global market activity. That's where performance is on edge as the impasse over the US